as with most situations with insurance, you don't appreciate it until you need it. And then so many times what I used to run into with people is that something would happen and then they'd say, I sure wish I would have had it. I wouldn't be in the situation that I'm in. If this is your first time checking out the Gig Geezer, if you're a returning visitor of the Gig Geezer, hey, thanks for coming by. And if you would not mind, hit that subscribe button, give my content a thumbs up, share my content among others, and I definitely welcome your comments in the section below. I'm back with another Gig Geezer segment, and this one is about health insurance. Why am I talking about health insurance? Well, if you say that you're in business for yourself, health insurance is a decision that you have to make. It's in the business expense that you have to make a decision on whether you're going to carry it or not. Certainly, if you don't carry it, then you need to have money put aside for those things that may come about. And if you just happen to be one that has medications, or you have to take certain medications, you'd have to put money back on a regular basis to cover those costs. Now, there are your health discount coverages, and then there are what used to be these indemnity plans that may reimburse you so much money for certain things. But I want to stick to something that's maybe more personal, but it is something that is also in the national discourse. Now, I am among those 40 plus million people who have coverage under the Affordable Care Act. I've been, I have had my coverage through the ACA or the exchange since 2020. Prior to that, I actually had group medical coverage from 1993 when I first came to South Carolina until when I fired my ex. I was first under my group health insurance when I was worked at the newspaper, and then I was under her um, health insurance coverage from her job. So when I fired her, then I had to get coverage on my own. Now, some may want to know how much I pay a month. I pay $186 a month. My coverage has been as low as $180. It's been as high as $205. Now, the coverage that I've used it rather sparingly in over these few years. And the reason being because I've been a relatively healthy person. I've gone for annual physical, and then I've utilized the plan for getting my small concoction of medication, and I'll admittedly say it's for cholesterol. And I used it, I guess you say, somewhat extensively in 2022 when I was rear-ended and had subsequent medical treatment. Now, for some of you, you may find this to be political, but what I'm going to do is just put it to you like this. As we know in the national discourse, there have been reports, there's been discussion, there have been other there's been other posted information depending on the results of the upcoming presidential election. There is a strong possibility, a strong likelihood that the Affordable Care Act will be repealed, meaning that myself and 40 plus other million people may be having to fend for ourselves and finding our best way to insure ourselves. Now, why would I say it like that? One of the biggest selling points about the Affordable Care Act, which is also known as the exchange and has also been referred to as Obamacare, is that it offered people the opportunity to obtain medical insurance coverage, individual medical insurance coverage, and they not be denied for pre-existing conditions. Prior to 2010, if you apply for individual health insurance coverage, you could be denied for pre-existing conditions. These conditions, the definition of a pre-existing condition is something that you have prior to you applying for medical coverage. Doesn't mean always that you're born with it. It could be something that you actually develop over time. For example, in my case, I come to find out I've been predisposed to cholesterol because of it being something on my mother's side of the family. But I did not know that I had cholesterol or elevated cholesterol readings until my mid 30s. That's right. So if I had tried to apply for individual medical insurance prior to 2010, a few things could happen. First of all, I could be rated. I could be ridered. I might face having increased expense, or I could be denied coverage. Now, what do I mean by that? Prior to 2010, health insurance companies could pick and choose who they wanted, and this was based on their underwriting guidelines. And conditions like cholesterol, while it may not have been something that could have gotten me disqualified for coverage based on their underwriting, if I had like that plus high blood pressure and maybe something else, these points would add up, and then I could be denied outright coverage. But since I had just cholesterol, these are the things that could happen. I mentioned rated. So let's say, because my premium right now is, if the premium coverage that I apply for is $186, let's use that example back pre 2010, which is a likely number. I could have been rated, meaning that the health insurance company would have said, Geezer, we will approve your coverage, but you're not going to have to pay $240 a month. And the $240 a month, based on the underwriting guidelines, is their way of offsetting the anticipated costs for my coverage over the next year. The other possibility is what they call being ridered. And a rider is an exception to the policy. That's basically what it means. And so that means that we would cover everything else except your cholesterol. Doesn't matter if it's related to a hospital, an office visit. Right. So the opposite of a diagnostic test would be a screening test, typical screening. Um, they would not pay for that. So let's say if I want to get my cholesterol checked, my insurance plan would not pay for my being checked for my cholesterol. I would have to pay the total cost, 100% of that cost. And if I went to get medication, they would not pay for the medication. So then, that's what a rider would be. Then there was the potential of increased expense. Now, this was kind of an end around to not being ridered or rated with what's called a high deductible health insurance plan. And so between 2005 and 2010, I did this on occasion. And so a high deductible health plan was one where you had a single deductible, you had no copays. And so once you met that deductible, then the plan paid 100% of all 100% of all covered costs for that plan year. So a typical deductible for an insurance plan in that year was like $1,500 or $2,600. So if I applied for the $1,500 plan, I could come back to the insurance carrier and say, okay, well, the customer is willing to take on a higher deductible if you accept them as is. And more times than not, the insurance company would accept the higher deductible because you've taken on a higher cost, a higher share of cost, or higher expense. The other possibility is denial of coverage. As I mentioned, cholesterol alone would not get you disqualified for coverage or denied coverage. But if you had a combination of like asthma, high blood pressure, you talk about, in my case, hip replacement surgery, or in what I mentioned in this segment of the gig geezer about having a colloid cyst, all those points would add up and the carrier would not cover me. Now, there were some other things that would happen that existed back prior to 2010. Let's say if you're a woman applying for individual coverage, one of the things that was not covered with your base policy, an individual policy, was maternity coverage. The only way that you could get maternity coverage was that you'd have to apply for a maternity rider, and then you'd have to pay extra money. Typically, it was like half of your base premium. So like if your base premium was $200 a month, you would have to pay an additional $100 a month for maternity coverage. And even then, there was certain things that they wouldn't cover. Now, what are some other examples with prior to 2010. There was a potential that you could have been denied coverage for being too tall or too short or too big in weight or too small in weight based on your height and weight scale. There was a certain sliding scale and you had to fall within those parameters. And if you didn't fall within those parameters, depending on the insurance company, you could be rated, ridered, or denied coverage. That's right. Now, one other thing that I want to share, and this kind of relates to the ladies with maternity coverage. Back then, for individual health coverage, and you could say this, which was also used when determining group health coverage, health insurance companies wanted their ideal customer was a male between the age of 18 and 45, because statistically speaking, a man 18 to 45 had a bright red S on his chest and rarely went to the doctor for anything. And for that reason, the company was making money because there was no money going out on claims. However, the person who paid the most in premium back then was a woman between ages 25 and 45. And that is synonymous with statistically a woman's childbearing years. And for that reason, if you look at the premiums, they paid more. However, I always joked with women and told them that, hey, that all changes when a guy turns about age 55. Then the guy's premium is more than a woman, because by then, guys who had not been going to the doctor start going to the doctor about age 55, at least statistically speaking. Now, talk about kids. That's even a harder one. And this is one reason why the Affordable Care Act has been so welcomed by a lot of people. I can think back to a situation with a guy I knew for a number of years. This is back in 2009, 2010. He was looking to put coverage on his family. He and his wife just had a son. The son was diagnosed with a heart murmur. And no matter where he applied for individual coverage, he was denied. He was denied individual coverage for that child because of the heart murmur. No company would take him. But under the Affordable Care Act, he could get individual coverage for the child. That's right. Now, what are some other things about prior to back then? Or what were some other things about back in that era? Group health insurance. Now, I mentioned that I've been a licensed insurance agent. One thing I never mentioned, though, was that with group health insurance, group benefits, that was my main engine for income between 2003 and 2010. In fact, at one point prior to the recession, so that was prior to 2008, I had a book of business that was in upwards of $1 million. Yeah. And so one of the things that I encountered a lot of with employers, they would often tell me, I'd love to have group health insurance coverage, but nobody wants to pay for it. And I'm not going to pay for all of it. And what often happened is that I'd have to turn around and leave, because I knew that in order for this employer who may have had like 12 employees, he had to have 9 full-time employees to say, yes, I want coverage. And when it comes to group health insurance, the employer pays a certain amount and then the employee pays a certain amount. And then what a lot of folk don't understand is that while some would say that my group health insurance coverage is less than what you're telling me for individual coverage, that's because the employer pays a certain amount towards your coverage. Typically, the employer paid half of the individual coverage. Um, the other thing is that the larger the employer, the more flexibility they had with putting together a health insurance plan. A much larger employer could actually carve out a plan for certain segments of the employee population. In other words, those who are lower paid employees, they may not be offered coverage at all. But if it were upper management, they would be more likely to want group health insurance coverage, and that was a way of attracting and retaining those employees. But that's enough of the insurance talk. What I want you to see is that just based on the few examples that I've given you, while there is this discourse, this hidden discourse, I would say, about the Affordable Care Act potentially being repealed if based on the outcome of this presidential election, keep in mind that when you're a business for yourself, you've got to make certain decisions. Okay. You've got to make certain decisions. And one of those decisions is your personal health care. What do you do? Do you get health insurance or do you not get health insurance? Do you go to the doctor to check on to be checked on or not? And how do you pay for it? And so hopefully I've helped you see at least some of the things as someone who is in business for themselves, who's in enterprise for themselves, and some of the underlying ramifications of the political discourse out there today. One other thing I forgot to mention before I wrap up this particular segment of the Gig Geezer, and that's about I mentioned that my premium is $186 a month. Now, the reason why my premium is $186 a month is because the federal government subsidizes my premium. The premium on the Affordable Care Act is based on a sliding scale of your income. The more money you show that you make based on tax documentation, the more you pay. The less money you make, the more the federal government subsidizes your premium. So in my case, my premium would be if there were no federal subsidy, it would be about $1,280 a month. And so I pay $186. Now I've seen some people say, why should my tax dollars go towards subsidizing somebody else's health insurance? Well, the reason why your tax dollars should go towards that is because while you may not have health insurance, it may be for you down the road. You're not guaranteed of having employer-based insurance. Employers do cancel their coverages for whatever reason, because they no longer want to sponsor it or because they can no longer afford it. So that's why your tax dollars go towards subsidizing somebody else's insurance. Now, while I'm at it, I've heard some other theories as to why people get insurance, but I will say this. When I was doing group health insurance, and I've already alluded to that previously, but I think of one particular customer that I had for about 6-7 years. He's no longer around though, but I approached him about trying to implement a group health insurance plan. He said, I've been trying to get it, but nobody wants it. And so I told him, let me take a shot at it. Let's see what I can do. And so what I was able to do was work around the gray area, work within the gray area of group health insurance coverage. And he had a group policy that lasted for 6-7 years. Within the first year of him having coverage, he slipped and fell and busted his elbow. And when I stopped by his business just to check on things, he was smiling. He was smiling like somebody had just put $10,000 in his pocket, because that's probably what he would have to put out for his health, for treatment of having busted his elbow. The reason being, I was successful at implementing a group health insurance policy. Prior to that, he didn't have any insurance. So you don't, as with most situations with insurance, you don't appreciate it until you need it. And then so many times what I used to run into with people is that something would happen and then they'd say, I sure wish I would have had it. I wouldn't be in the situation that I'm in. So that's all I have to share for this particular segment of the Gig Geezer. If you like the content that's been provided in this segment or in any other segment, hit that subscribe button, give my content a thumbs up, share my content among others, and I definitely welcome your comments in the section below. I'm Inwood Lane. As always, may your grind and may your hustle continue.